Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
All right, so welcome. I'm joined here with Joe Coleman, the master of disaster at Bigger Pockets, and really excited to have you here. Not really a master of disaster, an awesome guy. And this episode is a great episode, really, for anybody who is interested in getting into syndicated investments as an accredited investor, but you are not accredited. You don't have the income, you don't have the net worth. And there's a way to do it. And I did a post on this a while back, a ton of interest on this topic. And I thought this was an awesome interview because it opens up a door for a lot of people that just didn't have a way to get into some of the deals we do, like the ATM deal, the car wash, the oil and gas, other people's deals, things like that. Joe, what did you find out about this interview that was great?
Well, Bronson, thanks for bringing them on. I think that you're great at finding resources, all sorts of different resources, finding ways to, there's many ways to accomplish something. And this is one of those unique opportunities where, like, if you fit in this category of somebody who is interested in private investments and you can't just check that box for accredited investor, this is an option for you. So Ian and Brendan were a wealth of knowledge. I feel like we just scratched the surface, but a lot of great content here for people, I think, who are interested in private investments and just need some additional help to do that.
Yeah, so if you're in that place, this episode is going to be a game changer for you. So let's jump in here and get started. All right, welcome to the Mailbox Money Show. This is your host, Bronson Hill. I'm here with also my co-host, Joseph Coleman, and we are here with a conversation around becoming an accredited investor when you don't have the net worth and you don't have the income. I did a blog article and a video about this a little while ago. There's tons of interest. A lot of people want to know about this topic. And I've got a couple of experts in the space that actually help people to become accredited when they don't have the accredited income or the accredited net worth. So first of all, I want to welcome you guys. Ian Cummins, Brennan Ross, how are you guys? Welcome to the show.
Hey, Bronson, thanks for having us.
Yeah,
awesome. Yeah, it's always when I ask two people a question at the same time, it's easy to everybody answer. But excited to have you guys. So I know you guys have a company called Regdee. It's REGDEE.com. And what it is, it's a company that helps people to become accredited. Can you talk a little bit about what does it mean to be accredited, and what is, I wouldn't call it a loophole, but it's just what, the SEC has set up a way to do this, and you guys have found a way to help people to do this. So I think it's a very unique model. Can you just talk about how it works?
Yeah, sure. So an accredited investor is basically someone who has the ability to freely invest in private market transactions. And this has traditionally been dictated by your financial standing. So what the traditional thresholds are to become an accredited investor are either $200,000 of income for the previous 2 years by yourself or $300,000 income in joint ownership with your spouse. Alternatively, you could qualify under the net worth threshold, which is $1 million of net worth, excluding the value of your primary residence. What happened in 2020 was the SEC amended this definition to include several individuals. One was knowledgeable employees could then invest in, investments in their fund. The second was a professional designation, wherein you could take one of 3 series exams, the 65, 782, and qualify as an accredited investor. However, that's just one part of it. The second part of it is that you actually need to be in good standing, meaning you needed to be affiliated or associated with a broker dealer or investment advisor firm.
Yeah, that's and it's interesting. A lot of people don't know this about my story. I was an investment advisor. I'm no longer an investment advisor, but I was, and I passed the Series 65. And so I was carried with a firm and everything. And then in order to become a syndicator, I had to leave that in order to, it just got a little too messy. So this route may not be the best for somebody who's looking to syndicate or is a syndicator, but somebody who's a passive investor can be great. I've had conversations with investors, over 1,500 one-on-one phone calls over the last few years with high net worth investors. And I have people that, my net worth is 1.5 million, but I'm not accredited, right? Well, how is that? It's because 1.2 million is in my house, right? So there's people like this, that's their story, which is kind of interesting. So you guys have created a way to have people basically become an investment advisor. Now, do people have to actually manage money, or is it like something I've got to have a book of business, or what does that look like?
Yeah, sure. So what we've actually done is we've created a turnkey solution that we think is kind of novel, which is basically we've created an investment advisor. And all the individuals who we work with can operate as investment advisor solicitors for the firm, meaning they are solicitors who solicit business for our investment advisory. And as an investment advisor solicitor, you basically are conveyed 2 benefits. The first of which is that you are an accredited investor, so you have access to invest in private market transactions. And the second is that you are an investment advisor solicitor, and you can get compensated for referring individuals to our business, to our advisory business.
Is investment, I'm just curious about that term that you mentioned, Ian, investment advisor solicitor. Is that a legal term, or could you explain that a little bit more?
So the distinction between an advisor and a solicitor is a solicitor is solely responsible for soliciting business for the firm. They're not an access person, and therefore they do not dictate investment strategy for the advisory. So that's how each of our individuals are basically associated or affiliated with our firm.
Got it. So so the additional benefit, it sounds like, is if somebody has accredited investors in their network, they could also direct business towards you, and then they would be able to get some type of referral from that. Is that correct?
No. So what they would be doing is they'd be referring prospective clients who are looking for investment advice. And what our advisory offers right now is a simple model portfolio product that allows, or that gives individuals or prospective clients an asset allocation strategy based on their client profile. So what is their time horizon for investment, their risk appetite, their investable income, their investable assets, et cetera.
And so I think the clarifying point here, Joseph, is that these clients that our solicitors are going out and signing up don't necessarily need to be accredited investors themselves. So these are just individuals that are interested in getting involved in the market. And we offer them a solution, an simple investment allocation strategy that they can use to protect their assets, grow their assets. Really, we can kind of focus the strategy given their personal investment goals.
Yeah, so that's interesting. So there's a couple of reasons why people could do this. One would be to bring other people into investing and kind of do it that way, almost as whether a broker dealer or as an investment advisor. The way that I think was most compelling to me is, again, a lot of these people that are higher net worth that are just like, hey, I want to get into deals as an accredited investor. Now, we do a lot of deals. There's what's called a 506C deal, which is accredited only, and there's 506B, which is for accredited and non-accredited with a relationship or with some sort of substantial relationship. So most of the deals we're doing now are 506C investments, and we get a lot of people that your net worth is 5, 6, 7, 800K, and they just can't get into these. They can't get into our ATM fund. They can't get into a car wash fund or some of the oil and gas stuff we're doing. So this would be an opportunity if they would be willing to do the test and to work with that. They could basically be carried with you guys as an advisor, even if they didn't manage any funds. And for $500, $600 a year, whatever, they would have the ability to work with you. How hard is it to pass the test, or what's the process to do that?
Yeah, so to pass the test, the only test that you can take independently without being sponsored by a firm is the Series 65. Now, the Series 65 is a pretty passable test. I think the baseline pass rate for all individuals to take it is about 70%. That being said, we've worked with a number of individuals and only a handful of them have failed. Most people are able to pass on their first try. In terms of content covered, mostly economics and business cycle concepts that you'll probably be familiar with if you've taken an economics class in the past. Investment vehicle characteristics, so stocks, bonds, equities, options, et cetera. And then the stuff that's a little bit more specific to the industry is investment allocation strategies. So basically making a recommendation to an individual based on the criteria that I mentioned previously, which are like risk tolerance, timeline, investable income, et cetera. And then finally, rules, guidelines, laws, and ethics for investment advisors. Those last two pieces take about 60% of the test. And that's where we find a lot of people actually had to spend more time sort of studying and getting familiar with the concepts covered. When you take the test, sorry, go ahead.
I was going to say, yeah, and I was just going to add, and Ian, sorry to cut you off, but you're finished with your point there, is we do partner with a few different test prep providers. So there's a test prep provider that's well known called Notman Marks, which a lot of the banks use for all of their Series 7 exams. And then we also use a test prep provider called Achievable, which is a little bit newer in the space. And they really just make the process of studying easier, more enjoyable. The information can be really dense. So I highly recommend using one of these providers just to make the process as easy and painless as possible. And Ian, I'll kick that to you.
I think from what I remember, I think it was like they said somewhere like 40 hours of study. I think I studied for like, I took this test and passed with an 85% or something. I think I studied for like 10 hours. So, it's something that this was before I was pretty heavy in finance, but it's something that's not, a lot of it was suitability questions. Like a guy's 90 years old and, wants to do a startup fund that's high risk. It's like, would you recommend you do it or not? Or something. It's like, well, there's all these other factors there. And again, it's been a number of years since I've taken this test, but I just remember there was some suitability questions as well. Let's talk for a minute. Well, I guess let's talk for a minute, just kind of back up from the idea of being accredited and doing private deals. So this is something, Joe, I know you had a question in regards to this about private deals versus public deals. Can you just share that question?
So when you think about the different ways that you could invest in, let's say, real estate, to keep it simple, you have a lot of different vehicles to get to the same destination, right? So you could choose to invest yourself directly in real estate. You could invest in a private opportunity or a REIT. There's a few others, crowdfunding and things like that. Ian, I'd be curious, or also Brendan, to get your side of things, kind of more on the strategy side too. Is from a high level, how would you break down the advantages of investing in a private opportunity compared to something that's more liquid or SEC regulated, like a REIT?
Yeah, so I think the big thing is when it comes to investing in a private market opportunity, those are pretty limited to people who only fit within the network of the active managers of that real estate investment. As a consequence, if you're not an accredited investor, you are locked out of those opportunities, and that is probably the bulk of how all of real estate investments in the United States. REITs are specifically targeted towards specific asset classes and are really limited to what's out there in the public market, right? So there are, REITs are very specific and have specific use cases, either geos or asset classes that kind of limit your opportunity. I know, Brendan, if you want to kind of opine on that at all.
Yeah, I mean, I think just like higher level, like I think it's really important that you understand what you're investing in, whether it's a public market or a private market opportunity. I think Ian, as you alluded to, like REITs will generally have a very specific investment strategy. Some of them more broader from a mandate perspective than others. But I think it's important that you do the necessary work up front. I think you obviously want to have the understanding that private market investing does come with larger risk, potentially greater upside as well. But you should be aware of the potential lack of liquidity in those types of investments as well. Like obviously with REITs, like generally you can trade out a lot more easier than private market investments. So I think it's really important just to like obviously understand where your goals are, do the work up front, and make sure that you're protecting yourself, whether you're investing in private or public. I think my personal view is it's great to have exposure to both asset classes. I think there tends to be it's worth it to do the work on both sides to see what better aligns with like your specific goals and like most investment strategies, I think you want to be as diversified as possible and just make sure that you really understand the full risk profile of your holistic investment strategy.
Yeah, I think one of the kind of premises we make is that being in private investments, it really allows you to have a lot more flexibility, and obviously there's some disadvantages. So liquidity is both an advantage and a disadvantage. Warren Buffett says if you had a quote on all your illiquid assets, maybe you'd be tempted to sell, right? Versus when it's a liquid, you don't know what the value of your multifamily property is or your particular investment because it's more of a longer term type of strategy. So let's talk about this a little bit. It sounds like there's kind of two major folks that can benefit from this. There's somebody who is accredited, or not, excuse me, they're not accredited, but they have some investable assets. Second one would be somebody who, maybe they want to try to bring people into investing, and this is kind of a way to do it, to bring them to you guys. Really, who are you seeing more of, and who can really, would you say, is like the primary benefit of your program?
Yeah, so I think for individuals who are interested in becoming investment advisor solicitors, those are people who want to become actively involved in private market investments and simply just don't meet the financial criteria. And we really recognize like three core customer segments for whom this is like a compelling proposition for them. One of those are people who have commission-based income. So one year they may make $100,000, and a couple years later, maybe they'll make like $350,000, and they can never really bank on meeting that $200,000 income year over year, and so it's frustrating for them. The second are like younger individuals who are high earners who aren't quite rich yet, so they don't quite meet the income or the net worth criteria, but they do believe they will meet those criteria in time. And the third are people who live outside of large tier one cities, who are like entrepreneurs or investors. They're pretty savvy, but just by virtue of basically living in these tier two or tier three cities, they just will not meet the income or asset requirements. So those are the three core demographics for the advisor solicitor business. Now on the client side, on the client side, for any clients who are interested in our advisor, it basically is anyone who lacks basically like an asset allocation strategy or an asset allocation direction for their investments. So maybe they're like green to the market and they don't really know, how to invest based on their earnings capacity, et cetera. And what we can do is we can provide them an allocation strategy for them to go out and kind of enter the market for the first time.
And I think from an allocation perspective, like one of the big advantages that we offer over some of the more traditional investment advisors is our cost. So we only charge currently, subject to change here, $200 like per strategy. And because of that, we are significantly cheaper than a lot of the other solutions out there in market. So a lot of the individuals that we tend to work with on the client side are new to investing. That's not always the case, but in general, it's like people that are trying to get involved in the market don't really know where to start. They don't have necessarily, $500,000, $1 million. Maybe they're coming to us with $100,000 and they're kind of looking to get involved in the market for the first time. And that tends to be the kind of the type of profile we've worked with.
Sure. Now, this show is the Mailbox Money Show. This is primarily dedicated to passive investors, high net worth passive investors. And our group has raised close to 40 million from passive investors. This issue does come up a lot, right? The issue comes up from people wanting to get into deals. They're not accredited. I guess a question on this, you guys are the first group that I've heard about doing this. We don't really provide any sort of solicitation in general for the show or what we do. We just try to think this is a really cool opportunity that people can walk through to get accredited. I guess my question is, the SEC has talked about, and I've heard this from a couple different attorneys, that they've talked about basically having everyone, regardless of net worth, maybe increasing the net worth requirement substantially, like 10 million or 50 or 15 million or quite a bit more, because when it was first established back in the 90s or the 80s, it was like 3% of people qualified. Now it's like 20% of people qualify. But what have you guys heard anything about that as far as kind of what the SEC is doing, of like everybody takes a test unless you have a super high net worth, or have you heard anything about kind of changes in the industry in regards to the accredited status?
Yeah, I think there are two schools of thought on this. There's a push to basically soften the accredited investor definition, whereby they would basically allow people to just take a test and then could qualify as accredited investors. But there's another more hawkish faction that basically would rather raise the thresholds from whatever they are now to a much higher number. Numbers I've heard kicked around are like 5 and 10 million. I should note that members of the House of Representatives did pass a couple pieces of legislation that seeks to amend the accredited investor definition further. We've talked to a bunch of attorneys, ex-regulators, and policy experts, and they basically opine that their view, based on the composition of the Senate and the executive branch, is it's very unlikely for that legislation to actually pass and become law. So our view is that it probably won't happen. They probably will not make it so it's just a test to become an accredited investor. Unclear whether they would actually raise the income or net worth thresholds. I think that's a push that the current administration in the executive branch is interested in, but somewhat prognosticating here.
Yeah, I think as recently as 2 weeks ago, the most recent update is they had a hearing. The SEC was involved, had a few different speakers come in, argue both sides of raising the income and net worth requirement, and then some other individuals on the other side. And I tend to agree with Ian here that my view is there's likely not going to be a change in the short term. I think if anything, really the risk is that the net worth and income requirements are raised, unfortunately. But as I think everyone here can appreciate, like it's a dynamic kind of industry. It's a hot topic. Elections matter here, so kind of depending on who gets voted in, who controls the Senate, who controls the House, who controls the executive branch, like could really kind of lead to potential change. But don't expect anything in the near term.
Yeah. I have a question for you guys as far as how you guys got started on this path. I know you guys started this company a while ago. Why don't you guys talk a little bit about the journey and how you got going in this? This is quite a unique endeavor.
Yeah, absolutely.
Yeah.
Love to. So
Aaron, you want to take this one?
Yeah, I'll take this one to start off. Yeah, so I was working in investment banking, started my career, then transitioned over to private equity, lower middle market private equity shop. We had about $400 million assets under management, investing in businesses with $5 to $15 million of EBITDA. I was actively investing in early stage opportunities, and really invested across the spectrum. I invested in consumer products company and a Series A AI machine learning company. So like full spectrum, wow, fully industry agnostic. And I decided I wanted to move over to early stage from a career perspective after investing in different opportunities. And I joined a healthcare startup, took a large pay cut. An entrepreneur reached out to me on a really interesting opportunity, got ready to shift my assets around and make an investment. And he asked for proof of my accreditation. And I quickly realized I was no longer accredited given my career change. And this was really frustrating to me because I had been investing in $1 million+ LBOs. I had private market investing experience, and I actually had a few really good investments. And Ian had gone to school with my brother at Columbia University in the city. And I knew that he was working in early stage. So I called him up, explained my frustration to him. And it wasn't really until this amendment passed that we kind of got together and said, hey, like, I think there's something here. Ian, I'll kick it over to you to kind of talk about like your similar story.
Similar frustrations for me. I, again, worked in an early stage startup where most of the compensation was paid out in equity versus in salary. And as a consequence, I was frustrated. The inability to basically invest in private market opportunities that I had a chance to invest in. We researched this new amendment, and our thought process was, why don't we set up our own investment advisor? And then the second step was hey, like if we have this frustration, there must be other people out there who have similar frustrations to us. So why don't we try and put together a turnkey way to do this for others? And so that's sort of the genesis of our business.
That's great. Well, guys, I just really appreciate you coming here today. I think it's a very unique thing that a lot of people are very interested in, that have a high net worth, but they're not quite accredited, or they lost their income, or some are right there and they're not quite there yet. And it's not just you're accredited; it's having some net worth behind it. That's kind of what we look for as an investment group. Is somebody's got a certain net worth to make sense to put in 50 or 100K or whatever the amount is per deal. But it is something to definitely consider. So there's a lot that goes into this, but just really appreciate you for the value you guys are bringing, and for the background, and for really creating something that there is a need in the marketplace. Joe, any comments you want to make before we wrap up here?
Well, I'm curious, kind of hear more about like the stories of people who've used Regdee and kind of explore that a little bit. Are there any other resources that you would recommend to us to learn more about, whether it's your clients' experiences or experiences of people who've effectively been able to use your services?
So if you want to learn about the process, we have a FAQ and some descriptions on our website. We're happy to put people in touch with other individuals who have basically come through and become investment advisor solicitors for our advisory. I'm happy to, connect people and have them chat and see what that process is like. In time, we'll probably have, some descriptions on our site of, how that process went for individuals. So anyone who visits our site can see so.
Great.
Awesome.
Well, yeah, very interesting opportunity. Appreciate you guys sharing.
Oh, Awesome, guys. Well, thanks so much. Really want to honor you, Ian and Brendan, for being here, and appreciate the value you're adding there. And you're doing a couple of really unique things. People want to reach out, they can go to Regdee, REGDEE.com, and they can learn about this program that you have set up. Is there anything else you wanted to share? Any way else people can connect with you guys?
No, I mean, I think that's probably right. You can also email us at hello@regdee.com, and we'll get in touch with you.
Awesome, guys. All right. Well, thanks so much. We'll put some info there in the show notes. And thanks, everybody, for joining us. And we'll look forward to seeing everybody in the next episode. All right, Joe. Well, that was an awesome interview with those guys. I love, I really hadn't heard anything like that. And I get a question all the time of how do I become accredited when you don't really qualify. And this is a way to do it. And so I thought it was really exceptional kind of learning about that. What'd you think about the interview?
I learned a lot of things that I didn't know before. And I feel like this information, as I said in the beginning, it's hard to find. And so appreciate you seeking this out and bringing it forward to people so they can learn about it too. What did you think?
Yeah. I thought it was great. I thought, it's amazing the resource you need when you need it. Now, a lot of people don't know this. Joe and I have been friends for a long time. We just took a trip to Japan together. It was awesome. And there's a time when, when you're thirsty and it's, super hot outside, you got to find, they have these like water machines, these water stands everywhere, and you got to put your 100 yen in there and get your water.
Well, that would be a great investment. If you could find those guys.
Yeah.
You can't
We're going to have that guy on next week. We'll have that guy next week, right?
If you can find him. I know you can find him.
I don't know if he'd speak English, but we could interpret what he was saying. But no, just being able to find the thing you need when you need it. Because again, a lot of people are in this place where they have 800K, they've got 600K, they've got a certain amount of net worth, but they're not accredited. But they do have the ability to invest in some of these accredited deals, whether our deals, somebody else's deals. There's tons of great deals out there. I would say like 80% of them, 90% of them are accredited only. So it does open a lot more doors for people to invest. I did want to also make a mention, you're going to be here at this event coming up October 19th and 20th in Los Angeles, California. I feel like I'm ready to announce, let's get ready to rumble.
Let's do it. Yeah.
It's going to be awesome.
I'm excited.
It's the Advanced Real Estate Investing Summit. It is going to be incredible. And we do, at this point at the recording, we have a few tickets left. It's the code you're going to use to save 20% is Summit20. And that's at aresummit.com. We've got Ken McElroy, Neil Bawa, we've got Mark Moss, Jeremy Roll. We've got a whole slew of people that are going to be there. David Green, the host of the Bigger Pockets podcast, right? That's a big deal. Right. So we're excited. So anyway, really excited to hopefully see you there. Thanks for taking the time to educate yourself. Look forward to seeing each of you on the next episode of the Mailbox Money Show. Joe, thank you for being here as well. Hope to have you again as a guest host and really enjoy doing this with you.
Thank you, Bronson. Appreciate it.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.